All right, guys, you're welcome to today's live session. It's TPT. So, just quickly, we're just going to run through the trades we took today, and of course, um, the ones we didn't, and also just do a general lookout on the markets and what you can spot out, right? So, if you're just joining us, kindly like, comment, and then share the video with others. Also, remember to subscribe to us and turn on post notifications to stay put. All right, guys. So, firstly, earlier today we had in the morning session, I had established a couple of thoughts around the markets, which you're supposed to get the video attached to this one, but then I think we lost the recording. It's quite funny though, but then we move ahead. All right. So we have a couple of threads we have watched in the morning, and usually would go through all the stuff on our watch list, but then would separate the ones on our active watch list like we have today. We have just about 5 of them on our active watch list, but then only 4 were traded. All right, because all 5 were traded, but then I think I didn't execute silver because it was really not coming, wasn't coming back. But then, okay, so before we go to the active or before we go to the general watch list, we're just gonna go through the thoughts we established around our active watch list and why we decided to take the trades we did take today, and also see how we could, get some stuff out of it. So we start with S&P 500. All right, or should I begin with S&P 500? We're supposed to. Okay, let me start with my trip to Japan because I traveled to Japan. Yeah, so we took a trip during the Asian section yesterday to Japan. Okay, we took a trip to Japan during the Asian session. It's quite rare for me to trade Asian sessions though, but then I did. Let me drop a message for this man. But then I did. I think about 2 a.m. I think I dropped it here. I dropped it here on the TG. Okay, at 2 a.m. I dropped. I was going to buy Japan. I was flying to Japan, right? Though I didn't drop the one for S&P, I dropped it quite late. Okay, but if you were serious about it, you would have gotten a re-entry, which I'm going to also talk about how to spot re-entries on the market. Okay, your adventure you miss a trade. It's quite easy, very easy, and then except you have some doubts, you could just step out. So this is JP225, right? In case you don't know, JP225 is an indices, all right? So for JP225, now I'm not on, what do you call it now? I'm not on Pro TV, trading view, all right? So we may get a bit of I don't think I won't get what I want. I wanted to go to Traders Casa, but then so we may not go back in time, and do all this stuff. So we are just gonna use the active stuff. For those of you who were there in the morning, you knew what we did already. But then let me just establish a thought, round about it. So this is the daily time frame. Firstly, this is the daily time frame. We know JP225 to be a bullish asset generally. It is a weekly, so we know the asset to be a bullish asset. I'll go to the monthly. Let me start from the monthly because I want to spot out something. So you can see this guy has been bullish for the longest. Of course, if you trade the stock market and all those stuff, you understand why. So you can see. So I was asking in the morning earlier on, I said, how would you imagine trading this kind of thing? Can you just spot any entry, blah, blah, blah? But then, that's why you have time frames, right? That's why you have different time frames. So this is just the monthly. And I wanted to point out something for you guys on the monthly time frame. That's why I came here. So you can see this OB we drew here. I just spotted this here because it's a fair value gap, all right, that got filled. And then significantly, that is important to me, aside from getting filled, is the fact that it failed to close below the fair value gap. Now, this is the gap. What is the fair value gap? It's not something I'm supposed to be. It's not the and it's an elementary something, but just let me just talk on it, okay? So you have this candle, right? You have another candle here. So this is the candle, and then you have a second candle, probably up or down. Let me move down. Let me go down because I have the one for up here. So let me go down so we just do the explanations correctly together. So you have a candle here. Let's assume this is shade. The top of this candle is shade, right? Top of this candle is shade. So you understand your who is LC, right? Open, high, low, close, yada yada yada. You know the whole stuff. So you have 3 candles. So for fair value gap to occur, you need 3 candles to establish the thoughts. Okay. So I have this one is wicked upwards to probably length. Now, what is fair value gap? The distance or the difference or the space between this candle 1, this candle 2, this candle 3, depending, that's where downtrend. So the distance between candle 1, right? The lowest for a bearish market, the lowest part. Now on 500, if you recall, I give us a proper definition. That's not dictionary definition, actually, it was practical definition on Discord the other day. I think it should be on our comment section on Discord. So the distance between the lowest in a bearish scenario now, the lowest meaning not the close. I didn't say the close. So you have the open, high, low, close, right? So the low, the distance between the low and the high in a bearish market, the low of the first candle and the high of the third candle. So this space here is our fair value gap. In an upward scenario or in a bullish trend, the distance between the high of candle 1 and the low of candle 3 forms the fair value gap. All right, so that's what we have there. And then we have the previous month, which is July. July was bearish, but significantly. Now some would say that because July was bearish, we're expecting that bears are coming. Yeah, bears could come in, but before bears would come in, the market would have to buy significantly to a certain ratio. All right, and that's what we would establish here right now. Now, if I want to sell this market, don't forget this monthly. I want to see the market buy to at least, because it's currently hovering around the 50% of both June and July, right? I want to see it get to probably 75% or probably to this key level, but that's not our concern for now. It's a long-term trade, so we'll keep scaling out, scaling in as the case may be. So I want to take that off. So I want to establish the fact that this is the fair value gap, right? And then the previous month, which was July, was bearish. But guess what? July failed to take out the fair value gap. It has tested it and filled it, but failed to bodily wise. That's the correct English. It's not. So it didn't close through the fair value gap with a body close. It wicked off. What does that tell you? It has tested it. And for me, I consider a break when there is a body close. Right? That's point number 1 you need to take note of. How did we frame the buy we are buying right now? Right? How did you frame it? Now, fast forward to the weekly time frame. On the weekly time frame, this is the fair value gap area. Now, what do you notice? An impulsive leg to the upside, and then throw downwards. What's this downwards now? This area here you're seeing, right? This area you're seeing right here. This is an indication for buy. If you understand, 500, you want to say something? Your mic is open. All right. So this is an indication for buys. So if you understand your evening star, morning stars, Japanese candlesticks, I'm not here to teach you that, but then just to show you that these elementary things or these basics you seem to ignore, we play out every day in the market. So what scenario is this? If you understand candlesticks behavior, I'm just going to use a long candle anyways. Don't mind the whole. This is what you have here. You heard that? Are you hearing that, lad? That's the 55. It just broke our. You can see what I wrote here. Times 1. Someone says my screen is not changing. I'm still on what's it called? I'm still on JB25 weekly time frame. I'm watching the stream actually. I think it's your network. I'm watching the stream. All right. I'm watching the stream with my other device. So please check. So you can see now, this is what we have here, these 3 candles. Now, I taught you guys about relative lows. You check the previous videos on YouTube, right? I've talked about relative lows and relative highs several times. So for us, this is a relative low. I'll talk about it probably in our next session, all right? This is a relative low, this area here. We are currently sitting at a relative, or we sat at a relative low, which is this candle here. So this signals a bullish movement, indicating a bullish movement. Remember, this is our fair value gap in the monthly. I'm not going to dwell on this. I'm going to take that out. Let me go to the daily time frame. Now, on the daily time frame, what do you notice? Now, I'm big on Fibonacci. I'm very, very big on Fibonacci, right? I'm big on structure. Okay. So I took Fibonacci level, 75% Fibonacci level of this candle. Why this candle? Because of the accumulation area. Yeah, I call it accumulation area. And the reason will be explained probably. It has been explained in our previous videos, right? But then maybe in our subsequent, for those of you that are new here, in our subsequent sessions, we get to explain it better. All right. So I took Fibonacci level of this individual candle. Now, what is that individual candle? This is the order block. For those of you who do order block a lot, this is the order block that sponsored this buy, right? This is the order block, this black candle here. Colors are just used for decoration and the regional blah blah blah. So you can see this is the order block that sponsored this move. So this is an expansion leg. What do you expect? Market, no matter how market moves, you're expecting it to come back to the expansion leg, which it did. Now, for you to continue selling because of this massive, you see this massive bearish candle here on the daily, that was on the 18th, right? The whole day was bearish. So someone will be like, TP25 is dumping to the rock bottom. No. What happened? Once it got to that order block, it hushed, which is still falling in line. All right? It's hushed at this order block here. All right? It's hushed. And then what happened next? This is what is it a doji? I mean, what do you call it? You can see the candle here, formation here. What does this candle signify? Buys. The next candle will tell you what to do. And the next candle failed. I want to see this next candle trends upwards, at least significantly with a body close above the wick, or even if just give me upward move, but it failed. Now, we tried buying this market. I remember either here or here. We tried buying something and we're taking out. But guess what? I was fixed on the buys. Why? Because of this other block that failed to hold it, or that held this guy down and also held this guy down. Right? So this became a consolidation area. Excuse me, please. So the market consolidated for the longest, for about how many days? 1, 2, 3, 4, 5 days, including yesterday, 6. When I mean yesterday now, because we're in a new day in the market, even though this is 23 o'clock, all right? So for like 6 days, so approximately a week, market ranged within this place. Okay, people were making money from it, of course, all right? Some trade on the 1 minute or whatever. So it has been ranging there. So why did we choose to buy when we did, or when I did that during the Asian session? So you can see clearly. Now, I talked about field swing. I wish we had the recordings, I talked about field swing, right? And I said a field swing happens when it can happen on the upside or to the downside. So you have this is a clean buy. This candle here was signaling a very clean buy. And then boom, after the signal came in, it bought, and guess what? It failed. I'm going to use price annotations. It failed to take out this level, which is 56,517, 518 rather. It failed to take out this level here. So because it failed to take it out or significantly take it out with body close, it could be weak off. That's not my business. I want body close. You see my choice of word? I use the word body close because it's very important. So it failed to take out with body close. So what does that tell you? Bro, this is the failed swing. And then guess what? Once you have a failed swing, there is possibility of the market coming to rate either the low that caused it or the high that caused it, which is what we have here. The low that caused the failed swing was taken out. So I saw this earlier on. I think when I came to the market, market was here, somewhere around. Yeah, it was about, no, it wasn't there. It was 23 o'clock. Maybe 23 o'clock thereabouts. When I mean 23 o'clock, I'm talking about GMT plus 1. Okay. Marine time, by the way. So, or military time, by the way. So this is pushed to the upside. I can see this is a clean swing to the upside. All right. This is not a failed swing. You can see the body closed. This only indicates for me that this market will come back. What did I do? I used key levels as well. Line charts. So I just spotted the line chart here. And then that was it. I just marked on it. And I think it aligned with 75% if I'm correct. Did I check that? I don't know. Okay. No. I didn't check that. It was the line chart I used. I used the line chart and I got in and boom. Now, how do you get re-entries? This is one of the issues I have with people, right? Someone had asked a question and we had a call before this live. And I said, we're going live. Now you're not online. I'm about to answer your question, so no problem. So this is how do we get a re-entry, or how did we get a re-entry? Sincerely speaking, I am mostly H4 trader, but so once you see this, let me hide this. Sorry for the ad. Let me hide this guy. Once you see this is my 3 a.m. bullish candle, right? Push to the upside. On a normal day, the next candle that formed was 7 a.m. 4 hours, right? This candle here, this doji, this bearish doji, this small candle here, is signaling itself. On a normal day, I'm going to be bearing this market because of this signal. But because I understand overall structure, knowing where I'm coming from, a failed swing that has been taken out, and a successful bullish leg, I'm not going to be selling. Now, I'm going to bring a post, right? I'm going to bring a post to our live here so you can see, because when I posted the re-entry for the buys on this JP500, JP25, a mutual said he's waiting for me up there. It's about selling. I think somewhere around where that our alerts rang. I just laughed. I said, let the market decide. Why? Because I already knew where the market was coming from and where I was expecting it to go to. Does that mean I decide the market? Please no. Right? So for this scenario, we're expecting sellers to come in. But guess what? Because of this impulsive leg that we already had, it will be very difficult for us to revisit low, down, right? Because already this is a relatively failed swing. This candle here, this is a relatively failed swing as well. So what did we do? How did we get this re-entry? It's very simple. Fibonacci level. This is my Fibonacci. We had, firstly, we take Fibonacci of this first candle, which was at 23 o'clock, and you can see the 75% rested 65,655, just below there. And because of how the market has already formed, I knew that coming back here will be quite difficult. Listen carefully. This is where premium I expect this market to come to. If at all this market wants to drop, I was expecting it to come here. But let's see why it did not come there. Remember, this is a swing leg to the upside. First of all, we use the line charts to establish this at a key level here, because this is like a sweep, right? This is an impulsive leg. So what do you expect? You're coming back to this area. But then you go to the 2-hour time frame. Go to the 2-hour time frame. On the 2 hours, what do you notice? The line chart has held. Sorry, let me go back to the 4 hours. We had this line charts. The first one, first key level, and then this is, if you understand Quasimodo, we talk about break, sweep of liquidity, and then what? We test to Quasimodo. So this is another key level. So let me use the word Quasimodo key level, all right? I haven't heard that before anyway. So this is it. So I wasn't going to stay here to wait. I was going to stay below. And then market starting. Earlier on in the morning, I told you guys, for those of you who were there in the morning, I said my guy, FX Picasso, was buying as well. And he had already joined the first one, but he was waiting right here for the re-entry. And if you go to X, you will notice that I quoted his post when I was posting the re-entry, right? So this was it. It was that simple. Just key level. And then market is going. Where are we going to? We are doing a 1:10.6. Does that mean we're going to stay there? No. I already told you earlier on. I said these are potential risks to rewards, meaning that you could do more than that or you could do less. You look at the market behavior, look at the individual candle behaviors, and you walk away when the need be. Very important. So that we established our longs and continuation. So this first one is a 10 RR. The second one is a 10 RR. That's like 20 RR on just this particular asset. Now, I said while I was traveling to Japan, I decided to add a luggage. If you just travel alone now, and so I carried S&P 500 along with me. The same analogy, but then the funny thing is that now S&P 500 is standing somewhere that is demanding. It's currently somewhere that is demanding him to there right now. Well, I'm not feeble. So currently looking at this S&P 500, sincerely speaking, this wasn't a good place to want to buy. And I explained that in the morning, right? I say that yes, you're gonna buy here because the whole attitude that clearly stating buy. But then we also established that once the market gets here, which is this red line here, I say if it gets there and it fails to break it, and then we see reactions, we may want to step out because overall, you can see the attitude of this market is shouting, sell me, sell me, sell me. All right, you can see where this reverse I take happening from. Somewhere around probably, this is on the daily time frame. You can see probably 50. Okay, yeah. What? It's a claim by. It's a claim by no wala. 75%. I didn't even check this earlier on. Can you imagine? That's by the way. So we're saying that if the market gets to this first leg, this is on the daily, this first key level here, if it reacts, we're going to leave. You can see what happened now. There's a gap, right? There's a gap to the upside. So I'm still staying in this market. Now we are currently on the second, let me go to the 4 hours. On the second key level on the 4 hours, and we are yet to break it. So if we break it, we're going to hold to full term, which is the 9.5. So how did we get this trade? It's simple. 4 hours. Now what I did was the same thing. This is on the 4 hourly time frame. You can see this impulsive leg. We have been ranging around here. We range. Then what happened? All of a sudden, we have an impulsive leg to the upside. Once you see an impulsive leg, don't just jump in. Hey, the market don't let me go. That's a lie. It would breathe. You know they breathe in forever now. You go breathe in, breathe out, breathe in, breathe out. So the market also breathes. So I call it candle balancing. So maybe we just refine to 675 candle balancing. All right. So this is an impulsive leg to the upside. And then what do you have? The market breathes downwards. Now, when it breathes, guess what? I was not here when this thing happened. So I already, in quote, I've missed this trade. So how did I not enter here? I can show you my executions. It's right at the price. I know there's nothing to hide, right? There's nothing to fake. Okay? At least for those that have known me for a long. So this is the key level I used, right? But I didn't use it. Wasn't actually that directly the key level. The key level aligned with 75% of this candle. You can see 75% of this candle and this candle And if you want to understand the 75 principle or percent principle, talked about it several times in our previous sections, all right? And of course, I'll keep talking about it. Maybe one day we dedicate that day to talking about it. So this 75% aligning with a key level. 75% of my doji aligning with a key level. And that was it. Just came, and then it's moving. Now, re-entry. How do you get a re-entry for those that missed the trade? You can see the first impulsive leg to the upside. Boom. Guess what? If you go to the 1 hour for today, or for yesterday rather, for Wednesday, what do you notice? You notice a reversal happened to the downside. So where is it reversing to? If I was to enter this trade, sincerely speaking, this is where I will enter from. Let me show you. Let me hide this guy. If I was to enter this trade, this is where I will be entering from for re-entry. So let's assume I missed the trade. This is where I would have entered from. And my step will be reasonable. And then where am I riding to? Maybe all-time high or something. So that's where I would have entered from. Trading is everything is there. It's obvious to the eyes. The candles are talking. All right, they are not deaf. I mean, no, deaf not for hearing now. They are not dumb. The candle is not dumb. They speak. So yours is to listen. So if you're to subject on, oh, I want to catch the move, I made the move, there's always a re-entry. So this is 1 is to 9.5, this is 1 is to 8.6 something. And you're good to go. Is that simple. If the 2 to 5 has gone, we still have like how many we have already done. I'm gonna see how many we don't do. All right, so we have already done 1 is to 4 point something. Let's keep a hold for now. So that's just it. I hope we're clear on that. Now let's go to Euro USD. I don't know if I should go and exit my Euro USD trades. Let me check gold. I have to use gold to determine if I should leave my Euro USD trade. Let me use gold to determine. Oh. I have to leave. I don't like what I'm saying here. Let me see silver. Bro, if you executed the silver earlier on, I think that's if you had a pending entry. Please delete your pending orders on silver. If you do have a pending order on silver, delete it. Because I'm seeing a gap there, and where the market is reacting from is fair enough for reversals to take place. But let's establish a thought why we sold Euro USD around where we did. I'm closing my Euro USD trade. If you're still on the trade, please, I'm closing mine. You can close yours as well. So I'm out of Euro USD. 500. If you're still on the trade, I'm out. Okay, so Euro USD. How did we come about our sales? So if you look at it very sorry. So we did a
I came out. I just took 1 is to 3 from that.
oh, you already are. That's beautiful. That's beautiful. Me, I get big guy now. Shit. Now, wow. All right. So I was targeting a 1 is to 7, right? 1 is to 7.6, right? But we already did. Well, this one, I don't close already. But if you want to let him one say, they give me double high. Yeah, really, you all this kind. But then we talked about testing 70. No. Why did I close? Do you know we established tweezer tops earlier in the morning? Oh, Captain. On a no fit remind me. Wait, I don't want to say we established tweezer tops earlier in the morning. Do you remember? No. Okay. I don't already close. I don't close. You're never wrong taking profit anyways. All right, let's talk something. So we saw these tweezer tops on the daily time frame. All right, reacting from is it a weekly or monthly fair value gap? No. It was reacting from somewhere. I know. Where was the where? But I know it was reacting from somewhere. I don't vex. Okay, it was reacting from here, this key level here. So you can see the rejection right there at the key level, right there. So if you go to the daily, you have these tweezer tops. What does tweezer top signify? On a relatively high market, this is a relative high compared on this chart. So it signifies that the market is about to dump. And guess what? We go to the 4 hours. Now, how do we take our certainty for these sales? Why did I even close this page? What was I thinking? Ah, good. All right. Now, for the 4 hours, right? 6 a.m. printed bullish. Now, based off of how I change, I will tell you that this 6 a.m. here is indicating once a 6 a.m. 4-hour candle prints bullish, you may want to buy, but it depends on where it appears. So for this is a relatively high market. So I'm going to be selling. Why am I selling? Because of this week. Let me zoom in. This week it did here is enough reason for me to sell, reacting from a trend line. And you get to understand that much later in our later discussions. So how do we now get in? We look for key levels. We just use the key. This is the nearest key level we saw there. That's what we just used, nothing more. We went to the 2 hours. Is it 2 hours we used? Yeah, it was the 2 hours. We used 2 hours, on the 4 hours first. We got the 75% of this 4-hour candle, right? And it has already been tested on the 2 hours. If we go to the 2 hours, you notice it was tested already. So what did we do? We got waiting call. We got Fibonacci key level rather. We entered through the key level of this the key level. That's what we used in getting this trade. And you can see how it delivered. So the trade potentially did the 1:3. 500, you didn't tell me you made money from this trade. You just papa, hide yourself. So you can see it already did a 1:3, I'll be 1:4, if I'm correct. But it's all good. So I'm out already. So if he wants to go and destroy the end, let him go and destroy. That's how we got the trade for Euro USD. Now AUD USD, the same thing. For AUD USD was quite funny. Alright. Don't look at my big RR, forget them. AUD USD was quite funny because we didn't see any potential signal for reversal. So I called out this trade based off of the weekly, if you guys remember. And we're reacting from the weekly key level. The clean rejection we had there, you can see the key level on the weekly. And on the daily, sorry, not on the daily, on the 4 hours, we noticed that we had the first rejection on Wednesday in the morning at 2 a.m. and we had the second rejection at 6 a.m. So we just banked on it. And you can see it just tested and dropped. So excuse me, please. So we have checked it. This is like a 1:3. People like Captain would have enjoyed very well because he liked 1:3. All right. Me, I was stopped out, by the way. Just so you know, I was stopped out because of the week. But then, this market now, is there a potential that it can continue selling? Yes. Is there a potential that it will start buying? Yes. Why is it going to buy? It's because of this order block here. This is still an accumulation zone. This is what sponsored this impulsive leg to the upside. All right, just like I explained on JP225. And also, you could just go up, retest, and dump. So your papa no get market. You waiting concern me. I see the one where I collect, I run. So that's all for Euro USD. Then for silver, right? We're going to sell silver, all right, but then we weren't tapped in. So why were we not tapped in? I don't know. Okay, so why did we want to sell? Because it was screaming sales. How did we scream sales? So first I think we're reacting from a daily key level. Yep, a daily key level, which is right there. You can see it there. And then you can see the reaction. First, impulsive leg, failed swing, a clean doji, and then a bearish doji, and then what do you expect? Dump. I'm telling you, good fit drop come reach. Silver fit drop reach 67. But now we no come there strength to hold them. I was telling the graph today that I'm looking at gold to get to 4525. I mean, I don't come cash entry. Let's back to silver, Joe. Sorry, please. All right, silver. Okay, so you can see this is what happened with silver, right? So that's the daily. So we look for the entry on the 4 hours. How do we get our look for the entry? We're saying that 6 a.m. power candle was closing bearish after testing 75% of the 2 a.m. candle. All these terminologies you can understand them later, no worry. Your mind will be. So it has already tested 75%. So there was no point waiting there. So rather, instead of waiting there, I would shift my weight to the CCM candle, which was what we did. And we waited right there, 75% of the CCM candle. But we were yet to get there. Don't be surprised that this gap that happened, we just go and tap and drop. I won't be surprised because already it's giving this clean sellers vibe, very clean sellers vibe. And remember, if you understand psychological levels, this level here, this red line up, this one here, on the daily, this daily key level, this is the psychological level. Guess the price, that's $70 for silver. So this is the psychological level, this is 70. If you understand psychological levels in trading, you'll be everything I've explained. The same thing with gold. I'm not going to talk about gold because I didn't get an entry for gold. Right? I didn't get an entry for gold. So why did I say gold may turn bullish even though I was expecting to get to 45.25? It's because of this guy here. He's an accumulation zone. But this is not enough reason. I was expecting this level, at least this level. That's why I call that 45.25. This level here to be tested. Alright? Because this is actually an impulsive leg. But then this is not so much of an impulsive leg. So I think this may fail. This may be just an it may be, I didn't say it is, maybe an initial grabber. All right, let's go back overboard. Ended the years, we were expecting the sellers as well, but we couldn't get a re-entry, so we blocked, right? Here, the PHF, of course, this man has been just crawling and crawling. These two guys, I feel I want to avoid them for now. Here, PHF and USJPY, even though I took a trade yesterday on the chart. And then I think that was about all we did guys. Any question, please? School is sitting on $100. That's impressive. Wow, that's impressive. Let me keep quiet first. Any questions, please? 500. 500. Are you saying something?
No question, no question, so.
All right, other Faye. Any question? All right, guys. Thank you for joining the stream. Do well to like and share the video and also subscribe. Cheers, guys.